Good morning, this is Meir Valensky with Driving Markets. Right, okay, so yesterday was quite a whippy day. Started off up in the morning, then down during the late afternoon session, and then when the FOMC, the Federal Open Market Committee, released its minutes, it actually calmed down the markets, and the markets had a bit of a relief rally. What was the relief rally? Is that the minutes did not have any surprises in them at all, and as a result of not having any surprises, the market took that as the Fed is going to take it easy regarding raising interest rates and not going to be that aggressive. As a result of that before the FOMC, before the release of those minutes, then the Nasdaq, which is hypersensitive to interest rates, was down more than 200 points and ended up rallying all the way up to close down 0.1%, which is nothing. So you can see how interest rates are significantly impacting temperament and mentality when it comes to the Nasdaq. Okay, so what else have we got to look at in the driving markets? Overnight futures are slightly down. We don't know what's happening with the Ukraine-Russian crisis. It looks like a lot of saber rattling. Who knows if Russia's going to invade Ukraine? I'm of the opinion that was something that was going to happen, but they could actually step down. No one's really sure on that one. And of course, the consumer spending in the States yesterday was much higher than expected, and that also fueled more fear about interest rates. So everything about 2022, which I've been stating since September last year, and hopefully all the listeners have paid attention, is that everything is to do with inflation and interest rates. Okay, we cannot move away from that topic at all this year, because that is going to be the dominating topic regarding financial markets and regarding which direction they're likely to go, which surprise, etc. However, I do want to focus for a minute or so on oil. Now, I've been saying recently, if you listen to the YouTube videos on driving markets, I've been saying recently that oil looks like it's going to surpass the $100 level. This is excluding the Russia-Ukraine crisis. If war kicks off there, then obviously it's going to exceed $100, going to go well above that. However, those investors who follow graphs will look at the inverse volatility. There's a lot of volatility on the actual oil asset, and that would indicate potentially that we've come to a peak, and it looks like it could reverse the trend. So it's something to pay attention to. If you're an oil trader or you're looking at oil and you look at the graph, you'll see significant volatility around about the 93 to 95 level, which is extreme volatility, indicating that there could be a reversal in trend. So those people who are looking to trade oil, in my opinion, may want to look at some puts or selling some calls on the oil CFD or the oil asset, and take a risk, because it looks like that volatility is definitely peaked, and there could be a reversal in trend. If there's a reversal in trend, then you could see oil fall back all the way to probably about the $78, $77 level, which would make it a very good investment and trade if it does in fact change its trend. So if you are going to trade on that particular asset, then I would put probably a stop at around about the 103 level, something like that, and maybe looking to open a put option or selling it around about these levels. It is down overnight, just to let you know. If you look at your platform and you're trading, you'll see oil has come down a little bit, but not significantly. Other thing to look at is cable. Cable is the pound dollar. I'm very bullish on the pound. I do believe that the pound is going to rise significantly against all currencies, especially on the backdrop of the inflation reports in the UK and interest rates rising. There will be an interest rate rise in March for sure. There's no way they're going to let the March go by without an interest rate rise. So you could see the pound euro, pound dollar, pound yen strengthening significantly over the next few weeks in leading up to that interest rate announcement. So you might want to go long of pounds. Obviously, everything said in this video is an opinion, but that's my opinion as such. Crypto. So cryptos have come down slightly overnight. However, they're looking very, very strong, looking very stable. And Ethereum has gone back up to $3,150 level. I think it looks like a solid crypto. All it is that Bitcoin and Ethereum are the leaders, in my opinion, in the marketplace. Those people who want to trade cryptos should look at those as leaders and see where the rest of the market is going. What else have we got? I think that's more. I think I've covered more or less it. I did cover the microchips AMD yesterday. I made a mistake. It was actually up 6.93%. The day before, not 1.93%. That's my mistake. I apologize. I am human. I do make mistakes. It happens. That's the way it goes. This driving markets is a very casual broadcast there to educate and give you as much benefit as possible. Haven't got much more to labor on. So if you need to get hold of me, contact me on LinkedIn, on WhatsApp. I've got Instagram, Valensky Mayer. Haven't got many followers, so you can follow me on Instagram as well. Probably need to do a bit more videos. You can comment on this YouTube, you can subscribe, like, do as many likes as possible. That'll help me out. This is Mayer Valensky with Driving Markets. Have a good day.